British American Tobacco, often known as BAT, is a giant in the industry. It's one of the world's largest tobacco companies and has long been a favorite of investors, thanks to its high dividend payments and steady profits. But things have changed. BAT's share price has been in decline for several years, dropping over 50% from its peak in 2017. So, what's going on? The biggest issue facing BAT is quite simple. People are smoking less. Global cigarette consumption is on the decline, driven by health concerns and stricter regulations. BAT sold 21% fewer cigarettes in 2023 compared to 2018, and this trend is expected to continue. This is putting considerable pressure on the company's revenues and profits. The decline in smoking is a long-term trend, and honestly, it's unlikely to reverse. BAT is fully aware of these challenges and isn't just sitting idly by. The company is adapting to this new reality by transitioning to new product categories. These include vaping products, heated tobacco, and oral nicotine pouches, which are seen as less harmful than traditional cigarettes. They're growing in popularity, especially among younger consumers. BAT is investing heavily in these new categories, aiming to generate 25% of its revenue from them within 5 years, and 50% by 2035. It's an ambitious goal, no doubt. However, the transition to new categories is not without its risks. The market for these products is still developing, and competition is intense. BAT's transition to new categories is essential for its long-term survival, but it's not a quick fix. The company still relies heavily on cigarette sales, which are, unfortunately, declining. This means that BAT is effectively trying to outrun its own shadow. The company has been accused of using unsustainable pricing strategies, increasing cigarette prices to maintain its dividend payments. This strategy may work in the short term, but it risks accelerating the decline in cigarette sales over the long term. Smokers may switch to cheaper alternatives or, quit altogether. BAT's high dividend yield is a major attraction for investors, but it's also a sign of the company's challenges. The high yield is partly a function of the falling share price, suggesting that investors are not confident about BAT's future prospects. They are demanding a higher return to compensate for the perceived risk. The company's move into a loss-making position is concerning due in part to extraordinary items. However, it's still a worrying sign, suggesting that BAT's core business is not as profitable as it once was. The company needs to find a way to return to profitability while also investing in new categories. This will not be easy. Adding to BAT's woes is a recent legal settlement. The company's Canadian subsidiary, Imperial Tobacco Canada Limited, was involved in a long-running lawsuit, which has finally been settled. But the settlement comes at a cost. It will be funded by available cash and future Canadian tobacco revenue, impacting BAT's finances. The company's share price fell by over 3% when the settlement was announced in October 2024, highlighting the sensitivity of investors to any negative news related to BAT. Despite these challenges, BAT is not without its supporters. Some analysts believe that the company is undervalued by the market. They point to the high dividend yield and the potential of the new product categories, arguing that BAT is a solid long-term investment despite the recent decline in the share price. Deutsche Bank, for example, has a buy rating on BAT stock, predicting an upside of 32.3%. The bank believes that the market is underestimating the potential of BAT's new categories and thinks that the company's cost-cutting measures will boost profitability. BAT is at a crossroads, facing a number of challenges. These include declining cigarette sales, intense competition in new categories, legal headwinds, and an unsustainable dividend policy. These challenges are significant and cannot be ignored. However, BAT is also a resilient company with a long history of adapting to change. It has a strong brand portfolio and a global reach. The company is investing heavily in new product categories, which have the potential to drive future growth. Whether these efforts will be enough to offset the decline in cigarette sales remains to be seen. The future of BAT is uncertain and is likely to be a tale of two stories. In the short term, the company will continue to face headwinds from declining cigarette sales and legal challenges, and its share price may remain under pressure. In the long term, BAT's success will depend on its ability to transition to new categories and navigate the evolving regulatory landscape. Investors will be watching closely to see how the company navigates these challenges, looking for signs that BAT can return to sustainable growth and profitability. Until then, the share price is likely to remain volatile. The future of this once mighty giant hangs in the balance.